Good morning, ladies and gentlemen, and welcome to the show on Monday, the 1st of March, 2021. Thank you for tuning in. Glad to have you guys here. Now, let's get started right away and let's open up the charts right here and take a look. U.S. spending plummets in February. And it's not just about the Texas freeze and either. I'm going to tell you what. I think a lot of it has to do with the amount of time that's passed between the stimmy checks. It's a direct relation to spending, when the stimmy checks go out. Now, another story I'm following today is that Biden is backing the Amazon warehouse workers on a union drive, trying to put a union together. There's not that many people out there working right now. I mean, Amazon workers, suddenly Amazon is growing huge. People are buying a lot of merchandise and stuff from Amazon, not buying it from businesses or local businesses. So they're putting on a union drive. They're going to form a union, trying to form a union. Amazon warehouse workers. I'll tell you, that would be a big union because Amazon's huge now. Huge company. A lot of people are buying stuff from Amazon. But it's the convenience of it. And plus, everything is closed. I mean, I'm guilty of it. I bought from Amazon recently, Anyway, let's take a look at the silver prices today. We're looking at silver is up 19 cents, and a little bit of the pressure's been relieved off of the bond market. But the yields are still remaining rather on the high side right now. They're close to the point where they could explode higher again if they wanted to. It's a tentative sort of thing where but silver's up 19 cents. And, up is better than down. Let's take a look at gold today. See what gold's doing. Gold is creeping downwards a little bit, but right now. But it's still up $3.10. I guess over its low. But it is creeping downwards right now. Well, the overall trend is downwards right there, but it's starting a little turn on the end there. It's starting to move up just a little bit. Going to keep our eye on that as the day progresses. Let's take a look at cryptocurrencies today and see what they're doing. 1,478 billion for cryptos, and we're looking at Bitcoin price of 48,099. Still pretty high price, even though we've had a bust up. Its high, I think, was around 57,000 before it fell, We're looking at Ethereum is down at 1527. Cardano is $1.26. Binance coin is $2.48. We're looking at Polkadot at 34.74. XRP at 43 cents and Litecoin at 171.87. One of the things I find interesting here, I was just looking at this like last night, we see Tether, USDT, and Tether is a coin that's pegged to the dollar, but I noticed another one come on the chart here. This USD coin, number 12. And I think it's pegged at the dollar too. Is it like I haven't really stayed into it or anything, but is USD coin a competitor with Tether? Is it a similar coin to Tether? Because, they're getting awful big. $8.8 billion right now. Where Tether is sitting at 35 billion. So, yeah, Tether's bigger, but that's a pretty sizable amount of change right there. 8.8 billion in USD coin. So anyway, let's move on and take a look at the markets today. We see a rebound in the markets now. It's up 357 points at 31,269. I think this rebound's attributed to everything to do with the bond, what's happening in the bond market. Looks like the bond market now is restabilized. So that's probably why we're seeing this bounce in the market today. Let's take a look at oil. Crude oil today is 61.82, and it's up 32 cents too. Everything was falling off. You notice, see, the bond market is such a big market, that when we get turmoil in the bond market, everything else starts to fall. You know, the whole economy starts to fall apart. But now the MOVE index today, you know, we saw this big shoot up in the MOVE index. And it's not going down. It's up at 1.51 or 2% today again. It's moved above the 75 mark that I've told you guys about. And this is showing me that the problem hasn't went away in the system. This is one of my major indicators of the credit markets. There's still a problem in the system right now. It hasn't went away. When we see it go away, we'll see this MOVE index probably fall off and go back down in the 40s when the problem is cured. So the problem's not cured yet. This is just a little, the bond market's just backed off a little bit. Because this indicator right here would fall if the bond market, if the problem was over. So we got to keep our eye on the bond market. What's it doing today? Well, we're looking at not much movement in the bond market today. But the long end, the very long end, 30-year, is rising. It's up 2 basis points, which is not a huge move, but it's a movement. But the 10-year's falling. The 10-year's down 3 basis points. So we're looking at a 10-year at 1.42. That's still rather high during these economic conditions. Now, I'm going to tell you, when I say rather high, normally the U.S. 10-year should be like 5 or 6%. And it's at 1.42, and I'm saying that's rather high. So you know there's something really seriously wrong, because interest rates cannot normalize right now. Something very seriously wrong in the system when you have to have a U.S. 10-year that's way below the rate of inflation. And this little climb, you know, we've seen lately, it's just the bond yields trying to find the level of inflation. It's free market trying to find a level, you know. So let's take a closer look at this 10-year just real quick here. Look at the chart, and what do you see in the long term? I know right now it's fell. Just this little tip, you can see where it's fell down a little bit. But what do you see over the long-term trend in this 10-year when you look at this chart? Well, you see it moving up. But it's not moving up in a regular chart pattern either. It's moving up in an exponential fashion. So I can see that unless the Fed does something, unless they do yield curve control, we got more trouble coming down the pike. And what you seen it did, this problem, the gold and silver and cryptocurrency, when I say we got more trouble coming down the pike, means we might have further moves down in these commodity prices like gold, silver, and cryptocurrencies. Now, I hate to break the bad news, but ultimately, this is deflation rearing its ugly head. And they're going to have to do something about it. But until they do something about it, we're going to see maybe another surge in these falling commodity prices. Maybe it might be a week from now, you know. And this could very adversely affect the stock market. What am I talking about? I'm talking about as much as a 20-25% decline in the stock market. I'm talking about maybe silver prices breaking below the moving averages, and silver prices dropping down below their lines of support. And the same with gold, and also I'm talking about the same with cryptocurrencies. Until something's done about the bond market, you know, until the Fed does their, and they don't want to do it. The Fed doesn't want to do it, you know, and they're holding off. They're going to hold off. They're going to keep holding off until they're forced to do yield curve control. probably later this year. But as soon as that change is made and the Fed goes into yield curve control, then we're going to see these asset classes like gold, silver, and cryptocurrencies move up rather quickly. So it's all dependent upon the Fed route now at this point. How long is the Fed going to take before the Fed finally says, hey, you know what? We've got to put these bonds under control. We got to stop this rising yields on the long end of the yield curve. When's that coming? I say it's coming, but until that comes, you know, we could see a little bit of a bearish in the metals, and we could see bearish in the stock market and bearish in everything. Because the bond market is such a huge market. It can drag everything else down. As bond yields move up too, they become far more attractive to investors. If they start to, if we see a 10-year start to breach the 2% mark and start to head toward 3%, well, it's going to change the whole situation in the financial system. You know, 90.96 in the U.S. dollar today. In the dollar, you can see a trending upwards a little bit. Listen, thank you guys for listening to my show. Basically, what I'm trying to say is, for gold and silver investors and cryptocurrency investors, and I know a lot of you guys are, we're going through this little bearish period right now. And it's being caused by the bond market, right? And until the Fed changes their attitude, and they can't let these interest rates go up. They cannot afford to pay high rates of interest on the outstanding amount that the U.S. government owes in their debt, you know. So until they do something, and they can't let the stock market fall either. But the stock market will fall. This is going to force them into action. It's going to force them into yield curve control. I don't see any other option for them. Thank you guys for listening. Like and subscribe. Push that notification button. And we'll catch you guys in the very next show. Bye-bye.